line charts. This is what you see. So instead of using the candlestick, some people can decide to use the line charts to trade. I have a friend that uses line charts. It's still part of a chart. So, but basically, to give you more clarity and more direction is the candlestick chart, because it's very really visible and it tells a lot of story. So for that reason, we're working basically on the line and candlestick charts more, especially because that's where you'll be able to do your analysis. All right. So now you may ask yourself, how is this candlestick form? How do we know where to buy and how do we know where to sell? So you need, first of all, you need to understand how the candlestick is being formed, how it's made. You don't just open your chart and you look at, let's say, the market and you say, oh, this market is buying. Let me jump and follow them and buy. It's selling. Let me jump and follow and sell. No. You need to understand how the candlesticks are being formed. Each candle, one after the other, how does it form? How does a bullish candle form? How does a bearish candle form? If you can understand this, you will know what to do when you look at a candlestick. You will know exactly how to predict or to forecast where the next price action is going to move or where the next movement is going to, due to how you know how the candle is formed, the bullish, the bearish, the indecision, and all those candles. So for that reason, first of all, let's get ourselves familiar with how the candle is formed so that we can know what to use or how to use the candles to do our analysis. All right. So basically, let me go down to the lower time frame so that I'll be able to draw this. All right. So on if now a candle form, in fact, basically, candle has, let's say, parts, four different parts. Let's do this. I think you might start writing this down because it's going to help you a lot. All right. So now a candle has four different parts. Now this is a typical example of a candle. We don't even know whether it's bullish or bearish, but you can see this. Leave the color. The color might tell you, say, okay, it's a bearish, it's red, it's bearish. No, I can change this color to white color, and I can still tell you that this is a bullish candle or a bearish candle. Why? Because I know how the candle is formed. So the color doesn't matter. What matters is the formation. It's the formation that will tell you the story, not the color. So, but this is a typical candlestick. Now you know this is a bullish or a bearish candle. First of all, when a candle opens, we have what we call the opening price. Now let's take, for instance, this is the opening price. Where it opens, it calls the opening price. If it opens down, let's say it opened at this point and start buying, now this is the opening price. Where it's close, it's known as the closing price. That is where it's closed for that particular candle. So if it opens here and start going up and now close here at this point, then this is known as the close, let's say the closing price. Then we now have the wick, which is this low, or you call it shadow, and we have this other wick to the up here. So let me name it. So this is known as the wick. Same thing here is known as the opening price. Let's just call it the open. This is known as the close. All right, so let's take this out. So Now, since the candle opened from the low and start going to the upside and started buying, this candle is now called a bullish candle. This will be high. So let's make this high. So since the candle opened at the low and started buying, then close above its opening price, which is this point where the body starts, is the opening price. So once it closes above its opening price, this opening price is therefore known as a bullish candle. So any candle you see that it closes above the opening price, that candle is known as bullish candle. So, and that is to say that this is the body of the candle. The fat area is known as the body, known as the body of the candle. So this is the high, this is the closing price, this is the body, this is the opening price, and this is the low. So these are all the let me say the 5 parts of a candle. So you must know this. In fact, you must have this at the back of your head so that you'll be able to know what is all about on a candle. So if, let's assume this did not open here, this was now, let's flip it. Let's flip this to the downside. Now flipping this to the downside, you see that if this was our opening price and this is our closing price, for the fact that we close below the opening price, this candle is now known as a bearish candle. So it's not a bullish candle. Why? Because it closed below the opening price. So now the color now doesn't matter, because in fact some people can even decide to use white throughout on their candlestick body. They can decide to use just white color. But what matters is where is the closing price and where is the opening price. That is where this is where the candle closed and this is where the candle opened, and this candle is a bullish or a bearish candle. So take note, once it closed below the opening price, like here, it is known as a bearish candle. Then once it closed above the opening price, it's known as a bullish candlestick. So let's look at that. Let's look at an example on that on the chart. Now let's go to the daily time frame and see a good example. Now, looking at this candle, now let's take one of these candles as an example. And this is the last candle on GBPUSD on Friday yesterday. So, like I said, you must take note of the opening price. Now, this is of that candle. That's the opening price. So, what do we have next? This is the closing price. And we have a very little wick. If you can see, let me zoom in. Let me zoom in. Now, if you can see, we have a very little wick, which is here. So this is now our wick low and our wick high, which is also known as the shadow. So this is our high, this is our low, this is our closing price, and this is our opening price. So in that case, I can say that this candle is what? A bearish candle. And it tells a story. If I see this kind of a candle at a key level, I know what it means. I won't even allow anybody to tell me that, okay, there is something that is going on. Then I should focus on that particular direction. So this is simply telling me that this is a bearish candle, that you might likely have what? More push to the downside. So what else? Same thing happened here. This one, we had a low here, we had the high, we have the opening price at this point. This is the opening price. Where this previous candle closed is where the next one opens. So this is the opening price, and it pull back and close at this point here. So this is where it closed. So as it closed here, it still showed us that this is a bearish candle, but with the wick rejection, it also shows us, give us a lot of information. Now, candlestick is very, very important in the sense that the wick and the body tells you a lot of information. It gives you a lot of information. Now, like it always say that the wick do the damage and the body tells the story. What does that mean? Now, if we have this kind of candlestick with a large rejection to the upside and a little bearish body, it tells you the story that we had this candle open here and started buying. There was a huge momentum to the upside, and all of a sudden, what happened? The momentum reduced, and what happened? The sellers or the bearish momentum came in very well, and the candle now closed with a body to the downside. This simply means that we had a lot of buyers and the sellers overpower it. And what happened? We rejected. So this rejection already should tell you that there is no volume in that direction again. So that's to say, price is not ready to go in that direction. Now, let me also break it down. Let's go back to our candlestick anatomy. Let me show you guys something. All right. So now, looking at this candlestick, you can see that this is just the formation of the candle. Now, after the candle is formed this way, we have what we call, we have the different types of candle. Let me put it that way. We have different types of candle. We have the indecision candle. We have the bullish engulfing. We have the bearish engulfing. We have all those ones now came out of this particular candle formation, how it's been formed. So from there, so now let's look at those important candlesticks that you should start looking out for when you are maybe you are trading and you want to like forecast price movement and you want to tell the direction of the next price movement. So now that you're going to look, now how do we do that? First of all, when you look at your candlestick, let's say from the, because you need to go to the higher time frame, you don't do your analysis from the lower time frame. The higher time frame controls everything. Lower time frame are always just for entries and execution, but for the higher time frame, you want to use it. If you want a clear direction, use the higher time frame. So I'm just going to go through a rundown of some of the important candlestick you should always look out for when you are trading. Now, since we already know now how the candle is formed, we are going to look at how we are going to identify the reversal candles, maybe continuation candles, and what to do when you see any of them. How do you trade them? How do you use them for direction? How do you predict once you see any of them? So now, if you look at this candle, a big body and a small wick, two small wick. The body will tell you the story, while the wick will do the damage. What does that mean? Anywhere you see the full body, it shows you momentum. I think you should start writing some of these things down. The full body here shows you momentum. The wick is telling you that we are not ready to go in that direction. It's showing you a kind of, let me say, we are opposing that direction. We don't want to go there. But once you see a full body closure like this, it definitely means that we are ready to go in that direction, the direction of that momentum. That body there stands for momentum. It stands for, let me use the word direction. It gives you more insights of where they are going. But if you have less body and more wick, for instance, let's say we have this. We have this. This is the opening price, and this is the closing price. But we still had some rejection. Now, what this simply tells us is that this price opened here, bought to all this level, and sold back down, and sold back down to this level. Now, this one is simply telling you that price is no longer interested in buying to that direction again. So what do? You wait, because already the momentum, the volume is not big. So you can't decide where they might go to next. So you need to wait for volume now to step in. If you now have maybe the next candle now open here, let's say it opens here and now do this, give us a strong momentum closure to the downside. This now confirms your direction. Then okay, definitely we are going lower. But if it doesn't do this, and let's say it returns back and close, let's say close above this with the full body to the upside, it therefore means that this was just a trap. So we are going what? We are still going up. So you must first of all know that the weak edge telling you that okay, we don't want to go to that side again. Now, what else, or what do you need next? The volume should come in and give you direction. Once the volume comes in and give you direction, or momentum gives you direction, you now know, okay, definitely we are going this way. You can now know, okay, we are now moving that direction. So what do? You go to your lower time frame, you look for an opportunity, and you join them in that direction. It's as simple as that. So you don't always want to be steady on your lower time frame, but you want to do what? Look for the directional time frame on your higher time frame. Then now scale down to lower time frame and look for an opportunity to join in that direction. Hope it's clear. So once you have a weak rejection, know that there is less volume in that direction. Yeah. Momentum anticipating. So let's look at the system whereby you have you don't even have a body at all. Let's see when you have something like this. That's sometimes you have something like this on your chart. Now, this one is not even showing you anything. It's just rejecting to the upside and rejecting to the downside. But there is no volume. It's volume that moves this market. If there's no volume, we are going nowhere. We are staying where we are staying. In fact, the market will start consolidating for a very long period of time. But once you have volume, it speaks direction. So the more the volume, the more you see the movement in price, the more you are going to see price spooling in that particular direction. But the lesser the volume, more you are going to see consolidation. All right. So let me go through some candlestick Z pattern or candlestick you are to be looking out for, or the candlestick that we have. Now we have, let me see, we have a lot of them. We have a lot of different candlestick: morning star, doji, evening star, and all those ones. But the main thing for you to focus on for now as beginner are the momentum candle and your reversal candle. Now, what do I mean by that? Let's start again. Let me pull this down. Now, let's start again. Like I said earlier on, the momentum candle should always be the one that gives you the direction. Now, if you have maybe on a key level, if you are trading support and resistance, let's say we have a support here. Let's just say we have a support here, and price sold down to this level, and you have this candle, this type of candle. In fact, let me start naming the candle first so that you know candles I'm talking about. Now, this particular candle is called a pin bar. Some people call it hammer. It has a lot of it. You can call it pin bar, you can call it hammer. It's still the same thing. At least it looks like a hammer. So it's called the hammer. And like I said, what does this signify? It simply shows you that, let me change this color to green. So you now know that we are working with a bullish candle. All right. So if you see this particular candle, it's known as the pin bar. You can decide to write this down. And what is the what is the stuff behind this pin bar? If you look at it, what can you tell yourself about, okay, what's the effect of this pin bar? What does it signify? What's the significance of this pin bar at this level? Now, this pin bar, first of all, is telling you that we had sellers that pushed price down, like I said, pushed price down to this level, and all of a sudden, price rejected and closed back to the upside. So what does that mean? It simply means that the candle opens here, drop down to this level, and did what? Pull back up, get to this high, pause, and retrace, and close at this level. So it shows you that price is about to reverse. So this is called a reversal candle. It is known as a reversal candle. So once you see a pin bar, you don't just look for it anywhere. You look for it at your key level. If you are looking for buys and you see this candle on your support level, then you can start anticipating buys. A reversal is about to come in. Then this is the first candlestick that you should start looking out for on your point of interest, maybe your resistance level or your support level. You start now for a support level. This is what you look out for. On a resistance will be the opposite. So let me invert it. On a resistance, it will be the opposite. It will be like this. Now, the color here, like I said, doesn't matter. What matters is the body and the wick rejection. So if it gets to this point, your resistance area, and it rejects like this, it therefore means that price is no longer interested in going up. That's why we have this rejection to the downside, and we might have a bearish move to start coming in. So now, after you have this, let's pull it back to the bullish. After you have this on your support level, what you should do next is you wait and see the next candle that will form, because this alone cannot give you, let me say, the information that you need for your price to go. Now, it tells you that reversal coming, but there is no much momentum yet. Now, the next candle that will form will now tell you, okay, we are about to start moving. And what is the next candle that you should start looking out for? Is what we call a bullish engulfing candle. Let me take this out. Don't forget, this one is your pin bar or hammer. So now your bullish engulfing candle will now look something like this. All right. So let's say this is your bullish engulfing candle. So now this bullish engulfing candle now tells you, okay, the momentum has stepped into the market. So what do? You can start looking for what? Buys. You can start looking for your buy, replace your stop loss below, and do what? Start targeting other level in price that you're looking out for. You can start looking for your buys there and target any of your point of interest that you might be looking out for or where you're expecting price to go. So now this has given you the information that price has reversed. So you should do what? You should now start moving in that direction. So, but once you don't see this, and you see, maybe you see this, and the next thing, what happened? Price did this. Price decided to close below this to the downside. Let me shift this to this area. Now price decided to close to the downside this way. And let's say the color of this candle now change from bullish to bearish. From bullish to bearish. So it therefore means that we had a reversal that was coming in, but price has failed to continue in that direction. And what happened? It closed to the downside. So therefore means that we should start doing what? Seeing bearish movement. So what do we expect? A retest and a continuation. Now this should be done on your higher time frame for the direction. Like I said, it's not on the lower time frame you do this. This lower time frame is just confirmation. You can use this same scenario on your lower time frame for entry, and you can also use this same scenario for your direction on the higher time frame. So, but first of all, you must know where price is going before you engage. If you don't know where price is going, that's to say you are entering the market blindly, and price might take you out. So first of all, you must identify your direction before you look for entry. That so, like I said, if once this happens, automatically your direction should change from what? Bullish to bearish, because price has failed to engulf our previous candle. So we don't expect price to do what? To continue going up again. I know a lot of you have made these mistakes before. Maybe you'll be seeing price will be buying, and I'm going to show you a typical example of this on charts. You are going to see it today very clean and clear. So once you see this, just know your direction has changed. So don't do what? Don't start looking for buys again. Instead, this your support level should be turned into resistance for price to go down lower. All right. Okay. So I hope it's clear. Those are the two major candles you should be focusing on: an engulfing candle, which will engulf your previous candle, and this pin bar. Don't look for much. If you can even go to your chart and start and work with this, you can be very profitable. Bet you can be profitable. Use this for your direction, and you go to your lower time frame and look for it for entry. You'll be profitable. You don't need too much. You don't need all the noise. So now let's go to the chart and let's see example of this, whether what we are doing here is correct. Now, like I said, first of all, do what? Start from your higher time frame for what direction. All right, so our higher time frame is weekly and also daily, but let's just work with daily for now. Let's see if you are going to have some of those scenario here. Now let's assume this is our support level. Let's start from here. This was our resistance level before price breakout. So let's just mark it out like this. Now look at what. Now look at what happened here. Like I said, look for it on your key level. If it is on a support level, you look for it for the pin bar, the buy pin bar. If it is on a resistance level, you look for the sell pin bar. So now this was our let's say resistance before price breakout. So what do we anticipate? We anticipate a retest and a continuation. Now we have gotten our direction. So we expect price to come back here. Now how are we going to enter? Look at this. The same thing that I told you, or that I've shown you. We look at this. This is a pin bar here. Now let me reduce this color. Now you can see the pin bar here. Immediately tap on top of our support that were broken, top support, we had this rejection. See the pin bar. So now, like I said, forget about the let's say the body, focus on how it reacts, the kind of candle that was given to you at that point. Now we had this rejection. Now what's the story behind this? It therefore means that price has stepped into our support level and it has rejected. That's to say price don't want to go back to that level again. So what happened next? Look at this. This bearish candle opens. Did this one confirm our reversal? Yes. But is it the right time to enter? No. Wait. Now, what happened? The next candle did not engulf our previous candle. What do we now do? We wait. Now, this was where we now had the engulfing candle. Although this is a daily time frame, like I said, we'll wait for entry confirmation. Now, when we had this, what happened? It has shown us a momentum that price is ready to go higher. So at that point, what do? We can mark the candle that it's engulfed out. And what do you expect? A retest and a continuation, which is what happened here. Retested, and what happened? It continued. So from here, we would have gone to the lower time frame. Let's say, for instance, even if it's the 1 hour or any time frame you want to use for your entry. And what do? You come there and start looking for an opportunity. Now, let me also show you another opportunity here. If you wanted to use that same principle, what I've just shown you now to enter. Now, look at what happened. Price rejected. Look at this. Now, this was the point of interest. Now, we have identified our direction. What happened? Price rejected here, but couldn't engulf. Next one did not engulf. Instead, it engulfed to the downside. You are still watching because you need that confirmation for the buys. So what happened? We still have another rejection here. We have another pin bar here. We had a lot of rejection telling you that price is no longer interested in going down. Then what happened? We now had this young man pop up here. This young candle pop up here and engulf our previous candle. So what do? You now do what? You take your buy and you do what? Place your stop loss below and target where? The high. Target that your external high. This would have given you a clean 1:4 risk to reward ratio. So imagine you doing this from the higher time frame down to the lower time frame for your entry. You'll be catching trades every week. Even if it's one trade you see on that particular week, it's enough if you have a good capital. Imagine this, you were able to catch this kind of a trade now. Unless you had let's say even if you had a $10 account and you risk $1, you'd make $4, $4.5, which is reasonable. Which investment will give you that kind of returns? So that's how it is. So now let me show you a scenario where the momentum candle was formed and it failed. Let's look at this. All right. Now this was our next support level here. Because price breakout, and what happened? Expect price to come back and hold at this level, then continue. Then what happened? If you look at this, look at, we have first rejection, have another rejection, is another pin bar for confirmation for a buy. But what happened? If you look at this one was supposed to engulf this candle to continue a bullish move. But all of a sudden, what happened? It did not engulf. Instead, we now close below the bearish candle, sorry, the bullish candle. And after that, what happened? You had to retest that bullish candle and start selling. And you've seen the massive sell we had since then till today. Price has been selling on GBP/USD. Because of what? We violated the I think the support too, because this is also the support that's supposed to move price. And you can see we also closed below it around this level. So all this move led to what? The selling of this price. If you can see, look, we had a lot of rejection here, but there was no engulfing to confirm. This one was an indecision, this one indecision. All these ones did not decide where the market would go to. because they were not giving us a strong momentum candle to the upside. So this was where volume came in, showing us that we are going down. And what happened? A retest, and after then, volume started coming. So we now went to another consolidation here. So, like I said, always pay good attention of those candles on your higher time frame. They tells you a lot of story. If you know how to identify them, you'll be able to predict the next market movement. You'll be able to know where price is heading to next. So you don't just look at the chart and jump inside. No, you don't do that. You don't do that. Now let's look for more. Let me look for more of it. If you look at the chart and you don't see any confirmation, for instance, let's look at this level. Although this place look a little bit choppy, let's look at this level. Now, if you look at what happened here, we had a sell momentum, and we also had a buy momentum. At where? Let's zoom in. Let's see if we have anything to the left. Why price was reacting at that level. Let's go to the higher time frame. Monthly. Okay. So, and let's go back to the daily. So at this point, if you look at what happened here, this was a breakout also. Price broke out of this last high. So if I mark that last high out, that week, if I go to the lower time frame, that's a pullback. So that was a rejection in price. Price went and closed above it. So now if you look at what happened here, you can see that we have to look out for our pin bar, bullish pin bar. That is, it should reject to the downside and close back to the upside. But what happened? That did not happen here. Instead, we have a strong bearish engulfing candle that engulfed our previous candle. What do? You don't trade, because this has not confirmed this direction or this point of interest yet. So you wait. That's why I say forex is a game of patience. If you don't have the patience to wait for what you are looking for to show up, then be prepared to lose money. It's as simple as that. Because if you wait for this candle to close and the next one now close back with same strong momentum, it's not telling you that, okay, your direction is beginning to be right. In fact, you are becoming, your prediction is coming to a reality. Let me use the word reality. So what do? That is when you can now go down to your lower time, because already this candle has cancelled out this one. This bullish candle has cancelled out this bearish candle. If I go to the 1 week time frame, you're going to see big rejection there, which is what we have here. Look at it here. So it therefore means that it rejects that level and it has cancelled out. So what do? You can drop down to your lower time frame, like I said, and start looking for what? Confirmation. Or you wait for it to engulf. Let's go back. Wait for it to engulf. And where did we have our engulfing candle? At this point. And this is where it engulfs. So the direction is set. Now, after the engulfing, how many days did this price bought? 1, 2, 3, 4, 5. 5 good days. So your patient here would have paid you out here. Have you seen? So all your patience you would have waited here for all this to happen would have paid you a lot at this level. So that is why they say patient. If you don't have the patience to wait, then prepare. They're going to pay with dollar to then know. You get? Alright, so that is just the basic knowledge for candlestick anatomy. So those are the candles you should always pay good attention to them, and you must know how they are formed and how you react to them. You don't rush, just be calm, study them one after the other, and from there you know where your next price movement is going to go and your way it's going to reverse from. It happens on all the charts, even Euro USD, any pair you look at. If I go to another pair now, let's say we look at GBP JPY, same thing happens. Let me show you another example on GBP JPY. Look at same thing happen here. And this is another perfect one. This was also another price broke out of. And price came back to retest. Like I said, we didn't have any engulfing candle here when we tap in. But what happened? This one engulfed the previous candle. What do? You wait. And where did the engulfing candle came in? This particular candle engulfed our previous candle. It has now did what? It has shown us that we are now bullish. So what do? You scale down to your lower time frame and look for entry and do what? You buy. So you're patient for waiting for this candle to close. You pay you off here, this movement. So that's how you trade. You don't just see a support or you see a resistance, you say, oh, this is a support, and the candle is selling, coming down, and you now jump in, boom. And let's say you jump in around here and you place your stop loss. You see this first rejection candle here, immediately tap it rejected. You now started buying here and you place your stop loss below. Even if you go to the lower time frame, you are going to see an entry. In fact, let me go to the lower time frame and show you an entry confirmation there. From here, let's go to the 1 hour. Now this is it. Let me pull this out. This is it. This is your 1 hour. 1 hour tapping. You even close and go off this candle. So what do? A lot of you will be buying here. And you keep your stop loss here. It's very clean. Your TP there. What will happen? This is how they'll strike you, take you out, and what happens is that they will start buying. So you must let them tap in and you get the confirmation they are going. And what happened? We now join. So this is where we would have joined your buy, the stop loss below, and you milk all this move to that level. So your patient here paid you off. So that is how you do your analysis. You'll be able to predict the market using just the candlestick anatomy or using just the candlestick alone. You don't need too much. If you start studying plenty, a lot of things, you might get confused along the way. So this is just like a beginner class for you to like go back to your chart, study the engulfing candle, the pin bar. There are a lot of them, but I really recommend you study those engulfing candle and pin bar because it gives you a hint of what market is doing. Look at this chart. This chart has been trending for the past how many weeks now. All what you'll be seeing is pin bar and engulfing. What do you see? See the rejection, rejection, pin bar, lot of pin bar here and engulfing here. What happened? Boom, they bought. They came back again, engulfing here. What happened? They bought. Came back again, another pin bar here. They bought, engulfing here. They bought. You look at it. So a lot of opportunities. See another pin bar here. This one engulf. They retrace back to this thing. And what happened? See the massive buys. So it's your duty. Look at another one here. We have another pin bar here, engulfs, and they bought. So it's your duty to go back and study them and know how, where, and what to do. Like I said, you don't just buy them anywhere. You look for support level or resistance level to trade them. Like all of this, look at this. They happen at a support level. Move on. Happen at this was a support level here. Happen at the support level. All this at the support level. So that is where you look out for them. You don't just trade them anyhow. You don't trade them anywhere. You must make sure that you're trading them on those key level. All right. So I don't know you body with question. Do you have anybody that want to ask a question? Do you have anybody that wants to ask a question? Anything you don't understand, can air it out. I don't want to go into the most advanced concept so that you won't be confused. That's why I'm keeping it basic. And when we get to the advanced, that's when you'll be talking about smart money concept, liquidity, imbalance, and all those blah blah blah. But for the basic aspect of this training, you just have to focus on the beginner part, how a candle is formed, how to know a reversal candle, how to know a continuation candle. Like those engulfing candles are like continuation. So you look for them on those key levels where you want to buy or sell them. So do you have anybody that want to ask a question? Do you have anybody? Yeah? Hello? Can you guys hear me? Okay. Skyrock want to speak. Yeah, you can unmute yourself and speak.
Right. Yeah, everything is levels.
Skyrock, speak. We are listening. Oh, he's speaking.
Thank you very much for the session, sir.
All right.
Hello.
You're welcome. Yeah, I can hear you. I can hear you.
Everything is clear. Okay, everything is clear. I got all the points, all the values you have just explained, and I so much
All right.
appreciate it. Thank you very much, sir.
You're welcome. Okay. So, do you have any question? Or everything is very clear?
Hello?
Yeah, I can hear
Okay,
you.
sir. So I understood. Okay, sir. Can you hear me, sir?
I can hear you.
Okay. I understood everything. The class is going smoothly, but the higher time frame, is it based on weekly or daily that we're supposed to use while looking at the chart first?
Oh, okay. Okay, that's good. All right. Yes, the higher time frame is weekly and daily for direction, even for us for direction. So anything below from 1 hour lower that all entry confirm. In fact, lower time frame use that word lower time frame because their own direction will be short term, but the higher time frame will give you a longer term direction where price is heading to on the long term. So you can be using that higher time frame direction and you'll be trading that on your lower time frame continuously in that direction till it changes. So that is how it's been done. So those 1 hour can give you a short term, like for instance, the daily can be bullish and the 1 hour is bearish. What does that mean? It's pulling back. 1 hour is doing a pullback to a daily level for a continuation. And I don't know, I hope I'm not talking to pure beginners. Let me know who I'm even speaking with self. I know all of us now are traders, so we don't know who is beginner, who is an advanced trader again, or intermediate. So I hope the answer is clear.
Yes, sir. Yes,
Okay.
sir.
Okay. So always look at it from your higher time frame daily for that direction. Then lower time frame for entry confirmation. All right. So are you a beginner trader or you have been trading?
I'm a beginner, sir.
Okay. Okay. No problem. You're welcome. So do we have any more question? If you have any other question, even if it's not related to what I'm showing you now, you can ask. Maybe we can just put you through and I give you more clarity on some of it.
Okay, sir. No question for now, sir.
Okay. All right. So who else? Who else have a question? Who else have a question?
I think everybody has gotten it clearer.
Okay. Okay.